Hey everybody, it's me, Gregory Mannarino. How are you today? It is Thursday, March 1st, 2018. People, sometimes you get a little bit of gratification out of watching people take a hit. And it's really the truth. And I want to cover that because it's just too stupid to be stupid. Who does that sound like? Your friend and mine, Greg Hunter, who's absolutely right. As I am doing this video blog, stocks are down. Dow Jones Industrial Average down about 100 points. But why sometimes you get a little gratification? In serious, I hate to sound like this, but it's the truth. And let me put a perspective on why I do feel like this, and I admit it right here. Prior to the market open, we got yet another round of bad economic news. Now, just prior to getting this new round of bad economic news, which just happens to be that we found out that consumer spending, are you ready for this? Consumer spending fell in January. Now, keep this in mind. The U.S. economy is over 70% dependent on consumers continuing to spend. That's the truth. Now, so stock futures were down triple digits prior to this new announcement of bad economic news. All of a sudden, we get this new round. Consumer spending falls in January. Bad economic news. And then all in the blink of an eye, stock futures reverse and go higher, reversing the entire triple digits to go positive. Now, all of those out here that went in there and bought up the futures thinking, wow, this is great. We're going to push up stocks on this particular round of bad economic news. You just got destroyed. And I am happy you got destroyed. You know why I'm happy you got destroyed? This market is upside down, and it's about time that this market starts responding to news the way it should. Bad economic news should never be good for the markets, but this is the environment we have been in for a decade now, with the Federal Reserve running the show. This market is an addict. It's a drug addict to the highest order. So that's what's going on here. They're trying to pump up that bond market now. Interest rates are coming down. Bond yields are coming down a little bit. I don't think it's going to work today. I think today's going to be a down day. Plus, we got Powell again coming out talking before, I think, a banking committee. Oh, they're not going to mention the balance sheet. Could you imagine that? But look, here's the situation, and it's pretty straightforward. This market has got to achieve some kind of normalcy. It really does. Bad news cannot continue to affect this market in a positive way. Bad economic news should draw the market down. The Fed has got to get out of the way. No matter how much pain this is going to cause, and it's going to cause an enormous amount of pain, because the market is a drug addict. Again, try to wean an addict off of whatever drug they're addicted to. There's going to be a lot of pain there. Same thing here. So this addicted market really, hopefully, is becoming real, like I said in the video yesterday. And just one more time, I just want to push this point home. For those of you out here, you futures traders who bought up the futures on bad economic news and are getting killed right now, how do you like that? How do you like that? I'll see you later, everyone. At the end of the day, at my wrap up, I just can't take this nonsense anymore.